Gold is on fire, smashing records and rewriting history. But behind this glittering rally lies a question that could define the next big financial shift. Is this the dawn of a new golden age, or the calm before a brutal correction?
Welcome to The Explainer. Today, we have to talk about gold. It's on an absolute tear, smashing records left and right, and leaving everyone wondering, is this the peak? Or is this just the beginning of something much, much bigger? We're going to dig into the data to see what's really driving this historic rally and figure out if it's a golden opportunity or a dangerous trap.
Let's just put this into perspective for a second. In the first half of 2025, gold didn't just have a good start. It left pretty much everything else in the dust. A staggering 26% surge in just 6 months. That's not just a rally. That is an absolute statement to the market.
And we're not talking about some slow, steady climb here. This was explosive. Gold shattered 26 new all-time highs in the first half of the year alone. And that's coming on top of the 40 records it already broke last year. We are witnessing a truly historic run.
So yeah, the big question is, what's fueling this fire? What's behind such an explosive move? Let's break it down.
Well, when you really dig into it, this rally isn't some random market fluke. It really boils down to 3 powerful, interconnected drivers all working at the same time.
Okay, first up, central banks are on an absolute buying spree. We're talking about countries, particularly in emerging markets, just gobbling up gold at a record pace. They're making a strategic shift away from the US dollar, and gold is their go-to asset.
Driver number 2, it's all about monetary policy. You've got the US dollar having its worst start in, 50 years. At the same time, the Federal Reserve is pivoting to cutting interest rates. Now, when rates fall, boring stuff like bonds becomes way less attractive. And that makes gold, which pays 0 interest, suddenly look a whole lot better by comparison. And a third piece of the puzzle, and this is a big one, is good old-fashioned risk and uncertainty. In a world full of geopolitical tension and economic wobbles, investors don't just want returns, they want safety. They want a safe harbor. And for literally centuries, gold has been the ultimate safe haven asset.
And here's what's really fascinating. Academic research shows that gold's value goes beyond just reacting when things go bad. It actually prices in the threat of conflict. It's like it can see around corners, which makes it a totally unique hedge for navigating an uncertain future, not just reacting to what's happening right now.
Okay, so with prices blasting through the roof almost daily, everyone is asking the same exact question. Has the party finally peaked, or is there still more room for this thing to run?
To figure that out, we really need to look at both sides of the coin. You have the bull case, and then you have some pretty serious red flags. There are strong arguments on both sides here.
And this is where things get really tricky for investors. It's a classic battle, fundamentals versus technicals. The underlying reasons to buy gold, all that central bank buying, the expected rate cuts, they're still strong. But then you look at the price chart, and it's gone vertical. It's what traders call parabolic and extremely overbought. And that usually screams, watch out below.
So how high could it go? Well, some analysts are looking back at the last huge gold rally after the 2008 crisis. And if history is any guide, their models are pointing to a potential price target of, get this, $4,150 an ounce. But, and this is a huge but, that same analysis comes with a massive warning label. These kinds of insane parabolic moves often end in what's called a blow-off top. It's a final, frantic surge, followed by an absolutely brutal crash. The sell-off, as one analyst put it, could be something epic.
So, the crucial question is, where do we go from here? The World Gold Council has actually laid out 3 potential scenarios for how the rest of the year could unfold.
All right, scenario 1 is basically the steady-as-she-goes option. This is what most of the market expects. The economy kind of normalizes, the Fed makes some modest cuts, and gold, well, it pretty much trades sideways. Not much drama here, maybe a little bit of upside.
But what if things get worse? That's scenario 2, the big bull case. If we tip into a real slowdown or a recession, you'd see a massive flight to quality. Everyone would dump risky stuff and just pile into gold for safety, potentially pushing it another 10 to 15% higher. And then there's the flip side, the bear case. Imagine global tensions ease up and the economy actually recovers stronger than expected. All that safe haven demand would just, poof, evaporate. Investors would cash out their gold positions, and that could put some serious downward pressure on the price.
You know, it's really important to remember that gold isn't moving in a vacuum. This rally has lifted the whole precious metal sector, and honestly, some of its cousins are having an even wilder ride.
Seriously, believe it or not, silver has been the breakout star here. Gold's run has been impressive, sure, but silver has been on another level, with some ETFs surging over 54% this year. That is just wild.
So, what's silver's secret? Well, it basically has a dual personality. On one hand, it's a precious metal, a safe haven, just like gold. But on the other, it's a critical industrial metal. Demand is just exploding from sectors like solar and EVs. That industrial side adds pure rocket fuel to its price, which is why it's so much more volatile.
And the rally doesn't even stop there. Look at platinum and palladium. They're also posting these huge gains. For them, it's less about investor sentiment and more about a straight-up supply crunch. Industries like auto manufacturing need these metals, and right now, there just isn't enough to go around.
So let's bring it all together. Gold's future path is balanced on a knife's edge. You have these incredibly strong, fundamental drivers pushing it higher, but at the exact same time, you have these flashing red lights from the technical charts screaming that it's gone too far, too fast. The risk of a sharp correction is just as real as the potential for more gains.
And that leaves every single one of us watching this unfold with a final, critical question. In this unprecedented market, is gold a prudent hedge against the uncertainty ahead, or is it a spectacular, parabolic trap just waiting to snap shut?
In a world chasing safety and fearing collapse, gold stands tall, but even the brightest metal can cast a dangerous reflection. The question is, will you hold or will you fold before the next move?